Awesome. Happy Wednesday, everybody. Welcome to the MFC Financing Zoom. My name is Shelly Miles. I am a commercial mortgage broker. Together with my husband, Jerry Miles, I am the co-founder of Adventure Commercial Capital, and I'm going to let him take over from here.
All right. Welcome, everybody. Happy Wednesday evening. This is a little different because we just had a call last week, but it should be a little fresher and things. There's been a lot happening in the market and everything else over the last week. So I'm glad we're able to get together again this week. So here we go. We'll get started. So today's agenda, we'll go through the community ecosystem. We'll do some introductions, current debt market update, and then our main topic, we'll be talking about bridge and hard money debt. And then we'll, at the end, do question and answers. So there's some new leadership, some new people in the leadership group here with the MFC. A lot of good people here on this page. I think everybody's IG handles here on the page. So take a picture of that and try to connect with every one of them.
No, I'm going to share it on the chat here.
Okay.
Bear with me for a minute. I'm going to share it here and you guys can connect with any one of us guys. If you have any questions, our IG handles and emails, I'm going to share it here in a minute. And whoever you feel comfortable connecting with, or if you want to connect with everybody, that's fine. But I will share it here and you guys can connect away.
Yep. Everybody on here wants to connect with you and wants to learn more about you. So get on there and don't be shy. Get on there and connect with them. So this tomorrow at 8 p.m., I have a special Zoom with Robert Martinez. He's a great guy. Going to be talking about expenses, how to increase your NOI, just how to manage the expenses and just all the above on a property. So be a good one to get on and check out. JJ, we got some people in the waiting room and I can't hit there from where I'm at. So so jump on for that. It'll be great, I'm sure. Robert's a wealth of information. It's like somewhere between half a $500 million and $1 billion in real estate that he has under management. So a lot of things that he can teach all of us. So jump on that call. It'll be a good one. So who are the Miles? I am Jerry, and you just heard from my wife, Shelly. If you haven't never heard about us before, who we are, this is your first time on the call, I'll give you a quick introduction to who we are. Like she said, we are the founders of Adventure Commercial Capital. Before starting Adventure Commercial Capital 3 years ago, we ran a commercial construction business doing mainly commercial roofing. We've been in that business for about 20 years, started investing in real estate, ran into some shady characters when we was going to find funding and things for deals. Through that process, we decided that we could start a lending company and do a way better job than any of the people that we had run into. So here we are 3 years later. We still have our commercial roofing business. We're still real estate investors, but now we are also lenders, commercial mortgage brokers. So we lend on all things commercial real estate and investment real estate. So like I said, we're brokers. We have a lot of connections with a lot of good lenders. So bring things to us and let us do the work for you. So you don't have to go calling around and shopping around and running into all the shady characters. We know how to weed through them, and we've weeded through them already. So let us do the work for you. Come to us and we'll take care of you. So here we usually go to the next page and we say, who are you? And we give you a chance to, is that page here? Oh yeah. Who are you? Or here's our contact info before we go to that one. So take a screenshot or take a picture of it, write it down, whatever you want to do. That's mine and Shelly's email addresses. And that is actually my cell phone number. I would say 75% of the time you can get a hold of me on my cell phone. The other times it's because I'm either in church or we are, I'm on another call. So you leave me a message on, through voicemail or a text message or an email. I check those all the time. I had some people recently that left me messages on WhatsApp, and it was a couple days before I saw them and I felt real bad about it. But I don't check WhatsApp as much as I do my email, text, and phone calls and voicemail. So
Can you still hear me?
yeah, I can hear you.
Okay. I just added all the leaders' information in the chat, and everybody, you can grab whoever you want. You can grab all of us. You can do whatever you want there.
Awesome. Yep, the power of networking in this group. Put this group to its use. Network with as many people as you can, and meet as many people as you can. So there's a lot of good people on here. A lot of money on here for deals. A lot of deal makers. There's contractors on here. There's probably a commercial real estate agent or two or broker on here. We're lenders. And I know there's a lot of people wanting to buy real estate. So get in here and connect and make friends in here. So and I know a lot of people have said this in the past, but our pastor is a really cool old guy. Been pastoring at our church for longer than I've been alive, literally. He's been there for over 40 years. And he says, tell me who your friends are today and I'll tell you where you'll be tomorrow. And so, make friends with players and you're going to be a player. So, and I don't mean playa, I mean players. Right?
Playa.
So, all right. So we usually give everybody a chance to come up, or a couple of people a chance to come up and tell us who they are. But we did that, the Freedom Chasers leadership page a minute ago with all the new leaders on it. And one of those new leaders has got a new educational program coming out here next week, Andrea. And I'd like to have Andrea come up and tell us about her Zooms. I think she's going to be going every other Wednesday along with us, like every other one that we're not on. But she's been in the business for quite a while and has a lot of information and knowledge. So we'd like her to come up and introduce you guys to what she's going to be teaching on her calls.
Yeah, and this is the beautiful Andrea, and some of you probably saw her post today on the Freedom Chasers Facebook. If you haven't had a chance to read that, go and read it. It's a little bit about her, but there you go, Andrea, you can have the stage.
Oh, thanks, guys. I'm so honored and humbled to be on the stage with you. Well, first off, let me just say, amazing the fact that your kids, JJ, help you out with these Zooms, and he's got his own YouTube. I'm always amazed at the fact they have such an entrepreneurial family to begin with. But yeah, I was just going to come on here quickly to just tell you guys quickly how we're doing a multifamily foundation series that's starting next week, every other Wednesday, moving forward for the rest of the year. And we're just going to be teaching people essentially the foundations of multifamily. Next week, I believe we're going to be discussing how to find general partners and essentially what to look for in a partnership with anybody, because as you know, multifamily is a team sport and we can't do it alone. People who do it alone, I'm in awe of them. But I have worked in multifamily investing for the last 6 years, and I would say my portfolio has been close to 1,700 plus units in the past as a general partner and a limited partner. And I just want to share with you guys a little bit of knowledge, stuff that I definitely did not learn in the beginning. And feel free to tune in. I'll shoot you guys or just post on my IG an update about that. And I'm always excited to be on Jerry and Shelly's calls just because I learn so much from him and we just learn from each other. And that's the name of the game, being here and, giving back to people who we know want to invest in themselves and their families. So thanks for having me on. I look forward to it.
Awesome. Yeah, we look forward to hearing what you got to share with everybody here. So you guys tune into her and Avishkar are going to be doing. You guys are doing it together, right?
Yeah, that's right.
great.
Vishkar is one of my partners in the team, and we're buying a multifamily right now in Ohio. So we're going to go through a little bit of foundational questions regarding how to find partners. And, our journey's taken us 7 months to get here and to be underwriting 4 deals right now and putting in offers. So we're excited to share that with you guys.
Awesome. Thanks for being here.
And she said it, guys, connection, make these connections. These are what these Zooms are for. You connect and you have partners to do these deals with, and that's how you get it done.
Yeah.
Yeah, I highly encourage you guys to introduce yourselves in the chat. You might feel like I'm new here, or you're super seasoned, but I highly recommend you put your contact info, just what are your strengths, what you'd like to learn, and that's what helps us out too as leaders.
Yep.
Absolutely.
For sure. Thank you, Andrea.
Thank you.
All right. So
Yeah, go ahead and put your information in the chat and start connecting with people, guys. And if you're new here, welcome. Put a 1 in the chat if you're new, so we can say hi to you. All right, Jerry, go ahead.
all right.
Awesome, Jason. Welcome,
right.
buddy.
So next week on Thursday, right? That's Thursday of next week. Is that correct?
Yes.
Okay.
Yes.
Yeah, we're going to be having another referral, another Zoom about our referral partners program. Everything you do in this world takes money, and we're willing to pay people for referrals. So tune in to our referral partners program, learn how the system works, what we expect, and just how we can make some extra, how you guys can make some extra money helping our business. And the more money that we have, the more we can do, the more we can invest in the real estate, the more we can help people, and just all the way around. So this is a way for us to be able to look at more deals, give you more incentive to refer us and recommend us. And so, us being able to give out those referral fees is more exciting for us than it is for you. So I guarantee you that. So. All right. So to get to the current debt market update, the question that Shelly put out there was, will we ever see 3% interest rates again? That's a big question. And I don't really have an exact answer to that, other than 3% interest rates are not normal. What we had over the last several years with these extremely low interest rates is not the norm. I'm not saying that we couldn't get to that point again, but it's not normal, and I don't expect it to happen anytime soon. A lot of the analysts and a lot of the experts are saying that we're going to kind of hang out in this 5 to 8% range for several years. And we're going to bounce around from 6 to 7 to 8 and back to 6, and and it's going to be kind of a fluid market, a lot of the analysts are saying. So we'll see. It's going to be fun to watch. Tune in every other week, and we'll talk about it and see where everything's at. But as far as right now, there's no signs saying, hey, we're going back to 3%. The thing that they've been talking about on Bloomberg TV is how strong the jobs market is in the US right now, and that the Fed is very discouraged by how strong the jobs market is, because they don't want people to be able to have all this extra money that then they can spend and raise inflation. They're trying to curb inflation. And, so if you listen to them and you can kind of listen through the big words and things they use, it's, hey, we want to take all your money away, your equity away, and we want you to have less savings. We want you to not work. We want all these things. And then assets will go down in value and we can buy more of them, and that's kind of what you hear all the analysts saying on TV. But they use words like, curbing inflation and those types of words instead of those. But anyway, where are we at with the current rates? We have a rate sheet that we'll be talking about in a page or two from here. And we'll be going over, the Freddie and Fannie rates. The Fed rate now since last week is 5.25 to 5.5. It's the highest federal funds rate in 22 years, I believe. SOFR has been kind of unchanged. It's the secured overnight financing rate, and that's the rate that the banks trade back and forth on. A lot of our lenders, they're borrowing money from the banks and from investment banks, in Manhattan and things. They're borrowing big chunks of money to then lend out on deals. These private lenders, a lot of them, that's where they get their money, is from Wall Street, and then they turn around and they're borrowing at 5 to 7%, and then they're putting on 2 or 3% above that. But those rates are usually based on SOFR. So when you see the SOFR rate, just know that that rate there is what a lot of bridge debt and things is based on. The 10-year Treasury, I changed it just a couple hours ago on this sheet. We were at 3.8 this time last week. We're about 20 basis points higher than that today. So when you're going after Freddie and Fannie debt, you're going to be about 20 basis points higher this week than you were last week. So, and as your 10-year Treasury goes up, the spreads are going to get bigger too. So your spreads are going to increase. So it might not be 20 basis points. It might end up being 30 or 35 basis points higher when you get to your final rate. So with the current market, the damage to the market is happening right now, but the problem has already occurred. Okay, the big problem in the market currently is the rates have jumped up at such a drastic increment in such a short amount of time. And that is, the hurricane per se, and when that hurricane came through, it tears everything up, right? But now we've got a couple years of rebuilding to do. So all these people that are in these loans that are, maybe they borrow at 8 million at 3%, and now that 8 million, when they have to refi out of this bridge debt, or when they when their loan comes due, the term on their loan comes due, and they go to an adjustable rate, that 3% loan for 8 million, to replace that loan, the only thing they can do is you're like 4.5 or 5%, or 4.5 or 5 million on a loan to replace that $8 million loan. Well, a lot of these apartment owners don't have 3 million sitting around to put into the loan to be able to refi. And so they're stuck trying to sell, for more than the property's worth at the current market. And therein lies the problem. And as more and more of this debt comes due, and these properties, the terms on these loans come due and they go to adjustable rates, there's going to be more and more and more problems for building owners in the current market. So that's what's going on, and it's going to be a slow process. It's not going to happen overnight. It's not going to happen just, in the next 6 months, more than likely. We're going to start seeing some little signs of it, but I think it's going to roll over into next year, and we're going to see, a lot of foreclosures. I've had quite a few deals brought to me that, these people are upside down in the property. They owe, you know, 3, 4, sometimes 5, $10 million more on the property than what they can borrow to get out of the loan. And they just don't have that amount of cash to get out of it. So you've got, when that happens, you've got, you know, equity investors, you know, if they've borrowed 10 million to buy this property, you've got 5 million in equity investors, right? And now the property, maybe you can only borrow 7 or 8 million on it to refi. Those equity investors, the equity's gone. There's no more equity. So their 100,000 to 500,000 a piece or $1 million a piece that went into the properties now vanished just overnight, you know. Thank Jerome Power, whoever you want to thank for it, but that's what happened. And then now you have a bank that has $8 million in debt on this property. They might not get 8 million out of it when they go back to the market to try to sell it. So then now you having the banks, starting to hurt as well. So it's going to be a long process. It doesn't happen overnight. But what I can say right now, do not overpay for properties. Do not overpay for properties. Just because you have, assumable debt at 3%, that doesn't make that property more valuable than one that you're going to have to take new debt on. Because eventually that assumable debt, that term's going to run out. So there might be some value there in that assumable debt, but it's not full, it's not a full value of the price of the property. Don't get excited and FOMO and think you're going to miss out. Hold to your guns, make sure that you're not overpaying for properties. I can't stress that enough. I'm in Grant Cardone's real estate club, and there was a guy on there today, their group on there today, and they were looking at a deal, and they're like, we think this is a good deal at 29 million. And Grant looked at the deal and went through the numbers with them, and he's like, you need to offer him 21 million. He was like, that's not a deal at 29 million. You're overpaying, by 33% or whatever it is there, needs to be big discounts on these properties if you're purchasing now. I'm a lender. I'll lend you money on anything that we can get the financing done for, but just as a trusted advisor, I like to think of myself as, don't overpay. So what are my lenders saying and doing? Mark. Yeah, go ahead, Mark.
Yeah, I had a question about that. As far as lending. So what size properties are these people purchasing that are, paying the let's say 29 million for, and how can you come back and offer 21? I know Grant, I've been in Grant's real estate club and classes too. Sorry, I'm not on camera. I'm driving.
Oh, you're good.
Just in doing underwriting myself, just kind of like the quick underwriting that I've learned from Grant on a property and going, okay, this is what this is valued at. How do you then all of a sudden go, oh, it's not 29 million, it's 21 million, and offer that? How does, I'm just trying to make sense of that.
Yeah.
That makes.
Yeah. Well, the way they was looking at it is, or the way he was looking at this one is their first year cash on cash for the investors was going to be like 2.5 or 3%. And they're hoping, over the next 2 or 3 years that it's going to be, 7, 8, 9%, in a 5 or 10 year hold. And then they're going to make a bunch of money on a sale. And the argument against, that is, we don't know what's going to happen in the next 5 years. I mean, this downturn in the market might take 5 years. And then, when you're looking in that way and you're looking at getting a cash on cash of 2, 3, 4, even 5%, you can get that from a U.S. Treasury right now.
Okay.
The U.S. Treasury, you can get 4%. So why would you ever go into an equity position for 2%?
Yeah.
And that was the argument against it. And then that's what you use when you're talking to your seller or your broker is, hey, look, my investors are only going to make this. The numbers work the same for any buyer. How are you ever going to sell the place at this price? And then you
Okay.
turn around from there and you say, and you're wanting to sell it for 29 million or 30 million or whatever it was. And then you're saying, but I can only get, 15 million in debt because of the way the market is right now. And so then you come to how, because I'm having to raise so much equity, their portions of the percentage are going down. If I'm going back down and I'm, instead of raising, 15 million in debt or in equity, I'm now raising 5 or 6 million. My cash on cash is going to go up to 6, 7, 8% the first year that way.
Mm.
And
Now,
the numbers are the same for everybody. So
yeah. Now, in what ways have the loan terms changed than what they used to be? Because I know Grant talked about doing interest-only loans for the first 3 to 5 years on these, just so that you could take that principal that you would be getting and either reinvest it or do something else with it. So are those terms still out there, or is that completely changed?
Yeah, we're actually, we turned an application in this week to a borrower, or last Friday, we turned an application into a borrower, and it's a small balance Fannie Mae loan, and our rate 6.3%, 10-year term, and it was 10 years of interest only.
Oh, wow.
And so I went back, and the borrower decided, hey, I don't, I'm going to own this property forever. I don't want 10 years of interest only. I want to pay some of the principal down. And we went back to Fannie, and Fannie said that we're going to jump the rate like 15 basis points if we go to P&I, because that's going to kill the DSCR, because they're going to pay more. So I mean, the market is still, Fannie and Freddie are wanting to give interest only because it helps the DSCR. They don't underwrite the DSCR to the interest only payments. They always write the DSCR to a P&I, but they're going to, the actual DSCR will be better if you have P&I, or if you have interest only payments. So.
Yeah, and to kind of reach that 1.25, what is it, 125%?
Yeah, I mean, a lot of deals right now, we're needing to get to the 1.3 to 1.4.
Now, is it even smart? Because it seems like in this economy and what's going on, that you would want to do something that is making sure that you're not going to lose money on whatever you invest in. And, I would want to make sure that DSCRs is not too high, but at a high enough rate that if things do slow down, you can still cash flow, or at least break even. Is that good?
Yeah. Always
cool.
Preparing for the worst.
Cool.
Yeah.
Well, man, I appreciate this. I won't take up too much of your time.
Oh, you're good, man. Thanks for being here.
Yeah, my pleasure.
Yeah. All right. So what are the lenders saying and doing? Lenders, lenders are still looking at deals. So that's the good of it. When lenders stop looking at deals is when we need to worry. So Fannie and Freddie have a lot of money there to lend still. I think a lot of the banks are starting to, they're getting squeezed a little bit. But as far as private lenders, they're still looking at deals. They're being more selective. We have some lenders that do a lot of fix and flip lending. Single family 1 to 4, units that they're, lending a lot of, smaller deals, and they got into the multifamily market for the smaller balance multifamily just a couple years back. Some of those have dropped out of the multifamily market just because, hey, we don't know this market as well. We're going to drop out just and stay with what we really know. So kind of some of that stuff is going, but lenders are still looking deals, so that's good. But they are being more selective. Jeff, how's it going?
Pretty good. I've got a quick question for you. The federal government got its credit rating lowered today. And I'm just curious as to what you think the impact is going to be on us borrowing money, because if we're borrowing money and the government's borrowing money at a higher rate, what could happen to us? I'm thinking we're gonna be headed for a different kind of a wreck that we're not expecting or not anticipating, because we're not paying attention to the news of the day.
Yeah. Yeah, that could definitely trickle down to the banks. It makes sense that it would. And that's all the more reason to be careful as you're writing and looking at deals and writing offers. So yeah, it could really trickle down, and could mean that the banks and credit unions and the lenders and everybody they are having to pay a higher interest rate to get money. And then you have the fear of quantitative tightening, where they start allowing them to lend less on the amounts of money that they have and the amount of reserves they have. So there's a lot of fear, as far as those types of things happening. I haven't heard a lot of people talking about it yet, as far as what's going to happen there, but I think there, a lot of people just don't know what to say about it.
Well, I think the news probably takes 3 or 4 days to settle in, where most people, hit the circles and where they walk around. The thing is, if you don't pay attention to some of the news that comes out every day, it can put you behind the power curve if you wait a week on something. It could change an entire focus on a deal. And the thing is you got a lot of sellers that are unrealistic. I don't know if anybody else has run into this problem, but every deal that I've seen the last couple of months, I've had cap rates that are nowhere near where they should really be, because the cap rate's a direct reflection of what the interest rates are. They're on different sides of the teeter-totter, and people are thinking, oh no, it's a 3 cap, it's a 4 cap, and I'm saying no, it's a 6 or 7 cap. You have to be above or at or above the interest rate. You really need a 2-point difference to be profitable, because if you're doing the same interest rate as a cap rate, you're headed for a wreck.
Yeah, you're breaking even. And you can't break even on a property because there's always going to be problems.
Who's going to pay all your investors?
Yeah. Yep. And Grant has talked about that on some of our weekly Zooms that we have with the real estate club. He's talked about, people bring deals and they're trying to buy deals that are, 30 and 40-year-old buildings, and maybe in the Midwest, and they're trying to buy for a 6 and 7 cap. And he's showing us properties that he's buying that are A-class properties that he's getting for a 6 cap.
Yeah.
And he said, if you're going to invest in a 6 cap property,
get one.
Said, why not invest in a new one with me, instead of buying these old ones, so some of these older properties, we're in the Cincinnati area. If I'm buying something in this area, it's going to be an 8 cap or plus, it's not going to be a 6 cap deal. So, but, all right. Well, thanks for being here, Jeff. So here is, the small balance Fannie and Freddie sheet that we're working off of right now. Take a screenshot or a picture of that. I said that we just turned a term sheet in. It was a 10-year interest only for 6.33%. And it was a Fannie loan, but we were at 6.33. We had some, lower, some affordable housing involved and things like that, which helped our rate to be really good. So I'm going to move on to the next one. So down to our main topic, we're going to talk about bridge loans. Another name and a few other names: bridge loans or transition loans. It's kind of a new term I heard this week. It's transition loan, and I thought that was a pretty good name for a bridge loan. They're the gap loans, swing financing, hard money, private money. There's all different names that you'll hear kind of for the same things. But it's property, it's loans that are used to get you through different phases of a property or of a business. And it's maybe you're having time constraints. You don't have the 2 months to wait on a closing through a Freddie and Fannie and you've got to close quick, we have bridge loans that we can close in 2 weeks. Maybe your occupancy is a little low, below 90%. It's not going to qualify for a bank, or it's not going to qualify for Freddie and Fannie. We need to bring a private lender in, to be able to stabilize it. We need 90% or better occupancy for 3 months to qualify for most long-term debt. And so if you don't have that on a property, bridge loan is going to be what you need to do. If you have a lot of construction or a new build, new builds are pretty much as bridge loans. Rehabs, so that's what bridge loans are used for. Anytime you have a property that doesn't have a good history of cash flow or needs a lot of rehab, just any kind of an issue, a bridge loan is going to get you through that issue. So what are bridge lenders looking for? What are they lending on? Lenders in the bridge space are always looking at the exit strategy. So they lend on what is this going to be, and what is the experience of the borrower. Are they able to make this stable? Are they able to do the work they need to do? Are they able to lease this property out better than the current owner? Or what do they have that they're able to bring to the table to make this property, or this, these properties are just businesses. So are they able to make this business, follow through with this business plan and bring this property to where it needs to be? So when they're looking at a property, they're going to look at the property, the location, and make sure that they believe the property can get to the point that this person says it can get to. And then they're also going to look at the borrower, and they're going to say, hey, Mr. Borrower, how much experience do you have with leasing new apartments that or buying apartments that are low occupancy and bringing them up to full occupancy? Or, have you done a rehab that, maybe it's a $5 million rehab, and they're going to say, have you done a project this size before? Because there's a lot of people out there that can swing a hammer that think they can handle a project like that. And it just doesn't happen a lot of the time. So they're going to want to see some experience. They're going to want to see liquidity. They're going to see liquidity after closing. So if you've got, your cash flow isn't going to be there for a while, they're going to make sure that you have enough liquidity to get through that time. So bridge lenders have tightened the belts a lot, in the last 8 or 9 months. Because there's a lot of bridge guys that are hurting right now. They have bridge loans out there that are, non-performing, and their people are being squeezed. They're renegotiating all these things right now because they're, because of the way the interest rates jumped up. They maybe borrowed a certain amount of money at, the bridge loan might have been 7 or 8% interest only for 2 years or 3 years while they stabilize this property. Well, now they have this property stabilized, and they were expecting to be worth 10 million or 20 million, and now it's worth 5 or 6 million because of the interest rates, the way they've gone up. And not just interest rates going up right now, there's big issues with taxes. There's quite a few states, especially Texas, has been killing people with taxes. I've seen when we've had our underwriters on deals and they get down to the nitty gritty, the taxes after the first year of ownership on some of these properties, were going up, where they were 130,000 the previous year, they're going up to 270 or 280,000 a year in taxes. And it's getting wild with that. And then also insurance costs, especially if you're in an area that has a lot of natural disasters. But insurance costs all across the country is going up to make up for those areas. And then also because inflation. If the roof blows off an apartment, it's going to cost a lot more now than it did 3-4 years ago to put a new roof on a place. So, just not just materials, but labor for permits, everything's more expensive now. So, a lot of the bridge lenders are feeling the pain from that. And so they've gotten really, really tight, a lot of them, on what they're going to lend on. So, rates and terms on bridge. terms vary greatly depending on the type of deal that we're lending on. Terms can be, 12 months to 60 months, generally just 12 to 36, but we have programs now that'll go out 60 months. We have, some that'll go down, 2.5, 2.25 over prime, 3 over SOFR. But as time goes through the year here, that's gotten wider and wider. We've got new construction deals now that we're quoting that are 7.5 over SOFR, and they're not locking in because they're, like I said, the rates are jumping back and forth, and they're not locking in. They're saying, hey, this is going to move every month. You're going to have a different payment amount every month, and that's just the way it is. But there's not other options out there. I mean, we have some of the best new construction programs, I think, out there right now as far as what we have to work with, and that's just the way the market is right now. So, for more risky deals, bridge lenders can get really expensive. I've had some that have been turned in recently to me that I just don't want to tell people about. I say, I don't have anybody for you because I don't want to be known as the guy that turned in the 20% rate. So, like I said, bridge lending can be just about anything. If you have an uncle that has a lot of money and wants to lend on a fix and flip for you and give you the money for it, that can be pretty much. I mean, that's pretty much a bridge loan. If he's giving you money, setting up, hey, we got to have this done in a year or whatever, I'm paying for it. That's a bridge loan or a hard money loan right there that you're getting from your uncle. I might have mentioned this last week, but I met an older gentleman at a local real estate meetup, and he's got a lot of properties, and sitting back and starting to just lend out cash now for fix and flips. And he told me his terms, and the way he underwrites deals for fix and flips now is he drives past the house. If he likes the house enough that he wouldn't mind owning it, if it defaulted, he lends the money on it. And then he's 12% every 6 months. So he's 24% a year on fix and flip loans. But he doesn't require any money down. No money down. He pays for everything. But he's collecting 24% year over year on his money by lending out this way. So, like I said, there can be so many different ways that people structure and do bridge debt or private money. And hopefully I've named a few of them, and you have a better understanding of how bridge loans work and the way they do things. Just so you know, when you do bridge loans, just about always it is interest only. There used to be some out there where they would take all of their payments and all the interest and things they accrued, they would take it at the back end of the deal. So when they would refinance out of that deal, that would be part of what you had to pay off with your loan that you was taking a loan out with. I haven't seen that in a while, and I don't think anybody, I mean, there might be some smaller guys out there doing that, but nobody that we deal with is doing that anymore, just because they want to collect when they can collect right now. So I think that is it on the bridge loans. We're doing pretty good on time. What can you do right now when you're going and you're looking at properties? Maybe you're looking and you're thinking, I need a bridge loan to buy this property. You're wanting to buy, apartment with a Fannie and Freddie loan or any type of commercial loan. General guidelines. I know a lot of new people don't realize this or don't know this. When you're looking at deals, the lender wants to see experience. So if you don't have experience managing a 10 unit or a 20 unit, chances are they're not going to lend to you on a 50 unit. You got to kind of stair step your way up. And the way to get away from that is finding partners. We've had a guy on here the last 2 weeks that wants to KP deals and wants to partner with people on deals. And he's able to buy up to $12 million at a time in real estate. He can qualify for that amount of loans. And he's got a lot of units and then can qualify for Fannie and Freddie debt all the way up to 12 million. So, network with people. There's people on this call that can KP deals and GP deals with you and get you qualified for loans. You know, when you're going for a $12 million loan, let's just say, you need to have a net worth equal to that 12 million or greater than the 12 million to be able to qualify for that loan. So what can you do right now? You know, if you work a W-2, you don't, you know, maybe you're a small business owner, you don't have real estate currently, or maybe you got a couple single families or some duplexes, whatever it is, wherever you're at. Maybe you do have 10, 20, 30 million in real estate. I don't know. But wherever you're at, what can you do today to progress to the next level? And if you're a beginner, first thing you need to do, get your own personal credit in order. You know, a lot of people, you hear a lot of gurus and things, and Grant Cardone, you know, I like the guy, I like his stuff. We spend a lot of money with his group every year to be a part of his real estate club. But he's always telling people, you don't need a credit score, you don't need this, you don't need that. Well, your KP on the deal needs to have a 660 or better, or you're not going to qualify for Fannie and Freddie loans. If you ever want to qualify personally, you still need to have that 660 or better credit score to qualify. So people that are buying and using a KP, I would imagine myself personally that they're always going to want to eventually KP deals or be the guy or the girl on the deal, right? So start working on your credit. Start working on your personal financial statement, your schedule of real estate owned. You know, if it's just one property or two properties right now, write it down. Track how much you owe on it. Track how much it's worth. Track how much you bring in. How much are your taxes and insurance? Keep track of all these things. Keep track of your personal financial statement, assets and liabilities. Put them in columns and watch them. And as you watch them, work on putting more in the assets, less in the liabilities. And as you do that, you know, your net worth's going to grow. You know, it sounds simple, but hey, if you don't ever write it down, a lot of people never realize what they got or what they don't have, right? So get your bio together, you know, biography about what you've done in real estate. Have you done wholesaling? Have you done fix and flips? Have you bought or been a GP or an LP on deals? You know, all the things. Educational courses, these educational classes we do every week, that can go in your bio. You know, work on raising capital or raising capital. You know, start talking to people. If you don't know anybody that has any money, make some new friends. So I was watching a thing. I'm going to go off on a thing here real quick, but put a 1 in the chat if you guys watched what is it? The Undercover Billionaire? Is that the name of it, babe? Yeah. The Undercover Billionaire, where Grant Cardone and 2 other people went and tried to build $1 million business in, was it 90 days? Yeah, 90 days. They tried to build $1 million business. I watched a behind the scenes thing that he did on that. He said the first thing that he did when he went to the place they put him in Colorado was he went to the gym so he could meet people. He went to a gym in a nice part of town where he thought there was the money part of town. And he started going to the gym every day so he could meet people. So, you know, maybe you don't live on that street with the, you know, $3, $4, $5 million houses. You know, find out ways, maybe go to that grocery store and just talk to people. Maybe to go to the grocery store in that neighborhood, or, you know, go to the stores, do your shopping and do your business in those neighborhoods and meet people. So, you know, raising capital, and then next, just work on making more money. And, you know, we said we have our referral program that we're going to be talking about again next Thursday. Jump on there. There's, it fell through the other day, but we had a deal in the works where we had a referral partner that brought a deal to us. And the deal, he was going to make $19,000. He was going to get a $19,000 check if that deal went through. There was a few things, some problems with the borrower's credit, and the deal fell through because of it. But you know, $19,000, $20,000. I mean, we have. I mean, we can lend up to into the billions on deals. So if you know people doing deals like that, refer them to us, and you can get a cut of it. So.
Yeah, And I want to give you guys a tip on how you can clean your credit up like in like a week's time. Go to annualcreditreport.com and look at your names on all the 3 major credit bureaus, TransUnion, Experian, and whatever the third one is. And make sure you have one name, because your name can be written many different ways. One name and one address. That helps people when they're searching for you, and it'll bump your credit score by probably 50 points. So that alone will help. And then dispute anything on there that is not yours. I tell you, when I first did mine, I had my aunt, my sister, everybody on there, and I'm like, that's not me. I disputed all of it and it went away. So I'm not going to tell you my credit score right now. It's really good. But I check it today. I'm always checking it. I've been for 10 years now, I've been like on it. So I have a really good credit score. But little things like that, annualcreditreport.com. Once a year, you get a free thing to check it, and just go check it and just dispute those addresses that are not yours or that are past addresses, and your name. Like, make sure you have one name. They won't dispute all the different ways your name can be, but they will dispute some of it and help you out with that. And call them. Don't email them or don't send a letter. You have to call them and they'll help you out. Or you can dispute it right there on the computer. I hope that helps.
Yeah, Shelly ran into issues because her name is Shelly Ann and her sister's name is Sally Ann. And they came in the country at the same time. And so their social security numbers one number off from each other. So their names are so close, and then their numbers were right, one number off. So
yeah, and you're more 100% of the time, there's something on there that's not yours. Everybody, there's not one person you would meet that their credit report is perfect to where there's something on there that's everything is all theirs. There's always something on there that you've never seen, never heard of, never done. And yeah, and you can dispute it. So
yep. Awesome. So question and answers. Anybody have any questions on bridge financing, on anything? Feel free to ask. If you have it in the chat, you can put it in the chat or raise your hand. So what was yours, babe?
I'm just reading somebody from the chat. I can't
Oh,
find
okay.
it. Okay, she said something about, do you have to do an appraisal for bridge loans? Because you had said it can close in 2 weeks.
On those, sometimes I have that lender in particular, they specialize in closing quickly. They do bridge loans 3 million and up. So 3 million, I think their cap is 25 million. So that range is where this lender works. But they will not always do an appraisal. What they will do a lot of time is, if I call them on a Friday, they see the deal on paper, they like the deal, they know they need to move quick. That weekend or that early next week, the lender's rep will actually drive to or fly to the property and go check it out. So they'll go and do a site inspection, and then they'll do all their underwriting and be ready to close. So Jaden, what's up, buddy?
Hey, so I just got a quick question, or not a question so much as just something to share. So I asked Grant one time about something on the underwriting because there was something that I wasn't getting wrapped up in my head. So as the cap rate's going up and the interest rate's going up, you're trying to figure out how much you can pay. So, and this may be somewhere in his paperwork, but this is what he told me personally. He said, take your NOI, divide that by the percentage you want to make. So if the NOI is 100,000 and you divide that by 8%, that's the price you can pay. So if you're paying 7 on the debt, you need at least a 7.5 or 8%. That gives you a ballpark to know what price you can pay and still make money when you're doing your napkin underwriting.
Nice. You know, Grant's always giving out numbers, man. That guy, he's a genius when it comes to numbers. I always learn from him when we go to the real estate summits and things, because he just spits out numbers so fast. people are putting it in their calculator and he's doing it in his head. And I can't keep up with him, but I'm always trying to write things down. So that's good. I hope you guys wrote that down. NOI divided by the percentage you want to make, right?
Yes, sir.
Nice. Okay, cool. Cool, man. I appreciate it, Jaden.
I like his profile picture there.
Yeah,
the tenants.
So needed for a quote, and you call me and you need a quote, or you email me things I need. T12 rent roll. OM can be useful because it tells all the details of the property with addresses and all that stuff. Something else that is very helpful. And
Howdy. How are you?
hello.
All right.
Hey, who's talking?
Oh no, I think he wasn't muted, so I just muted
Oh,
him.
okay. All right. So especially if it's a property that we're looking at possible bridge debt on, a summary of what you plan to do or a pro forma, we've got to have. Otherwise, we don't know how to proceed with the deal. SREO, schedule of real estate owned, and your personal financial statement can come after. I know a lot of people are they're bringing deals or not the KP, and they're looking for a KP, and I can also help with that. If you need to find KPs and things like that on your deals, I can help. I know people that are looking to KP deals. So that's always an option. So that's what we need. Our next Zoom for us, jump on tomorrow's Zoom with Robert Martinez. Our personal next Zoom is next Thursday at 8 p.m. We'll be talking about our referral program. Would like to see everybody there. And then the next Wednesday that we're on next week, you're going to have Andrea, who spoke at the beginning of the call. And after that, the next following Wednesday, we'll be having our call. We'll be talking about different lending options for CRE or commercial real estate. That's what it says, right? Part of my screen's blocked off. So
I'm sorry, what were you saying? I was reading something. What?
oh, okay.
Oh, August 10th, 8 p.m. is our next Zoom. It's our referral program. And then our next debt financing Zoom will be on August 16th at 8 p.m. And it's lending options for CRE, commercial real estate. And
Yep.
there's a question in the chat I was trying to read.
Let's see.
Maybe
Is it-
while you look for that, is it all right if I
Yeah, go ahead.
shoot one quick? Hey, what's up? It's Jason Rivas, first time here. I was in March, I was at the Real Estate Summit with Grant Cardone. I don't know if you can see my 10X bracelet I got on right now.
Nice.
So yeah, 30, glad to be here. 30, thanks for having me. 32 years old, been in real estate for 10 years, started in land, single family. I'm getting into multifamily, smaller stuff. I'm 1031 into that. I'm in the process of that, but I'm also going full forces on syndication. And I'm wondering, like you said, get new friends.
Yeah.
If you need to raise capital, I'm
Yep.
great at meeting people. That's like one of my strengths, and it's like, yeah, I want to invest, and I hear a lot of positivity and I stay connected. But as far as actually investing, there's like a block. I'm not getting the conversions. And so I'm wondering, one, what to do there, and then what I should be focusing on to close my first syndication, 50 units minimum or above, those two.
Yeah, when it comes to the conversion rate on investors,
Yeah.
That's kind of, from what I hear, that's a problem for everybody. A lot of people have 100,000 to invest when it's just an idea, but then when it's time to write the check, that money goes away.
Right. Yep.
Or they might go home to their wife or their husband and they're like, what are you going to do? There's a lot of different reasons, in sales, we own a roofing company, and we've, back at the beginning when we started our business, I was learning how to do sales door to door to sell roofs. We young, didn't have any money. We was just trying to make it, and the thing, that I heard from a lot of people is don't pitch and you can fill in the rest is like, don't pitch the woman, because then when her husband gets home, he's going to tear up the contract. Right. And so if you're dealing with a lot of married couples or a married couple and you're only dealing with one of them, you've got to be careful, because, if you're selling to the woman, that man's going to be upset. This guy's like trying to get you to give him money. What's going on?
Yeah,
And,
right,
and
right.
then you have the other issue where you have, you might have a guy that goes home and tells his wife, yeah, I'm getting ready to pull 100,000 out of our savings and we're going to do this, or pull it out of 401k. And she threatens divorce and he doesn't do it. I think that's probably a big issue with a lot of people. And try to get in front of both of them, get to know both of them if you're working in that way.
Okay. Yeah.
But then there's just a lot of people that don't want to tell you they're broke too. If you're pitching deals to them, they always have money.
Gotcha. Yeah. So just build the relationships and keep working on it.
That's it. There's a lot of different things it could be, but those are two that just come to mind right off the bat. And then just, just the believability factor of, is this a good deal? Maybe you work on selling deal better, but those
Okay.
are like the main three reasons why people would drop out that I could think of. But
okay. Right. Not having, okay. And then how about, to close my first deal, what do you feel like, in your experience, I should be focusing on? Pretty broad question.
Yeah. And a lot of that has to do with, are you planning to bring a KP in the deal? What's your net worth besides, and those types of things. Are you planning to bring a KP, or you want to do something you can take down yourself? So you got to look at your own personal finances and your experience level and all those things before. If you have, if that's a situation where you're trying to do one on your own,
no, for like 50 units and above, not on my own.
Okay.
Yeah, I got one I'm doing on my own, but it's smaller. But
Okay.
not for. Yeah.
Reach out to me. Take my email down. We'll put our
I took a screenshot.
and I can
Awesome.
I can connect you with some people too. So
Okay, awesome. Well, sounds great. And is it every week this time?
Every other week for ours, but the weeks that we don't have ours, Andrea will be doing hers. So.
Okay, cool. And when was the Robert Martinez?
That's tomorrow night.
Oh, perfect. At the same time on this link? Oh, you went silent. I can't hear you.
Sorry, I muted you, Jerry. I'm sorry. I didn't mean
You can
on this link, but there's going to be a link that will be emailed out to you, and that would be the link you get the Robert Martinez tomorrow night at 8 p.m.
Okay.
Eastern.
Perfect. And I'll get it since I opted in for this one.
Yep.
All right. Sweet, guys.
Hey, Jason, this is Mike Hawkins, the Hawk, man. How you doing?
Hey, good to meet you. Great to see you. How you
Man,
doing?
hey, your background story is similar to mine. I've been in real estate for a while. So how familiar are you with multifamily? Because it seems like, you may be new, crossing over, and I experienced some of the same things.
Yeah, syndication, very new. And then multifamily, like I'm in the middle of a 1031. I'm trying to locate one. I'm putting my second property on the market to sell to 1031 into under 10 unit deal in Fort Lauderdale. So that's where I'm at. Going to conventions, that kind of stuff, multifamily mindset, Grant Cardone's. I got one in Dallas coming up in the middle, and then a capital raising event in September. So
Right.
Brad Sumrock and then Tim Mize.
Yeah, that's good. That's good. Yeah, those are good friends of mine. So I just
Awesome.
want to say that, when you're first starting out, really the main thing is finding a good deal. This call tonight was about, debt and kind of the current debt. That's
Right.
kind of the next phase. Once you find a deal, you'll find the debt.
Yeah.
I would focus on sourcing deals, either if you have someone sourcing deals for you, or developing those relationships with the commercial brokers where you can send you deals in your buy box, right? So if you're looking for units, a unit size, let's say 50 and below, you make that clear when you're talking to the brokers, you develop relationships with them, they'll get you on their email list, and then you can start evaluating deals and underwriting. So you can start getting to the point where you need to find the right debt to match the deal and make the deal work to hit the returns for you and your investors. So, I would say
Right.
listing deals, so acquisition, and then the capital stack. When you talk about syndication, right? Those are two things you can do at the same time. So I would just encourage you to start developing those relationships with brokers, so they have you properties, so you can actually get in a position where you can actually find the right debt for that deal. That makes sense, or?
Okay. Yeah. Like open up the pipeline to start getting the deal and then work on it from there.
Correct.
Because I'm going to need the deal. Yeah. Then getting on the debt side.
Right. And then underwriting is really important in this. I mean, even if you start out napping
Right.
underwriting, find out your DSCR and things like that and what rates work. So yeah, so just get clear on that,
Awesome.
and you'll get, get some more clarity on just getting the right deal.
All right. Awesome. And then, I got Michael Blank's
SDA.
What is it? The
SDA.
yeah. There you go. Yeah, you got it. Yeah. And do you have a contact?
Yeah, I drop it in the chat.
It's in there. All right. I was speaking through it when you were talking, but I'll go back over it with a fine tooth comb here. I appreciate it. It's great chatting with you.
No worries. I'll drop it in chat.
Thanks
Oh, okay.
for being here,
Awesome.
John.
Thanks, Michael. Jason, before you go,
Thanks, Michael.
what Michael just said, talking about getting connected with brokers and underwriting and finding your debt. We have classes for every one of those on this, on the Facebook page where you can get connected, and we have a Zoom call for each one of those. So,
And it's
you
all
can learn.
free.
Okay.
Multifamily mindset's 40,000 a year, and this is free. So.
Yeah. Right. Yeah. I went to the 3-day. Yeah. Awesome. Okay. And then the Facebook was in the chat too, right? I think it was in the beginning.
You
Yeah.
should be.
Yeah, they just shared it again. JJ just shared it again. Just click on the link and join.
Yes. Awesome.
Oh, Freedom Fisher Facebook. Okay. Awesome. Wonderful, guys.
Thanks for being here, guys.
Yep. And just one thing, hey, JJ, man, good to see you, brother, man. JJ, Shelly, and little JJ, little Jerry. I'll say JJ again, but little JJ are awesome. So yes, they plug into them. They'll keep you straight.
Yeah, thanks, Mike.
Awesome.
All right, so that was our contact info. I'll put that back up. We're over time, so I don't want to keep everybody here too late. Our contact info there, once again, if you didn't get a chance to take a picture of it or write it down. And feel free to reach out anytime. Don't need to schedule a time. Just send me a text. Say, are you available? And we can chat. So.
Yeah.
Okay. Yeah, I just want to give an update on my deal.
Oh yeah.
We talked about one a while back. After sitting on some other calls and realizing what they really don't want to close before December. So I think the best negotiation standpoint is just kind of sit on it for a while. I'm going to take it next week, maybe to an investment team, and if I can raise enough capital on that, we might be able to move forward. But it's kind of such a weird structure. I want to better handle that. Since this was a converted high school at one time, what's it going to take to maintain that relative to a standard, slope roof stuff? So a few things I got to work out, but I might get that under contract if I can find enough interest, because the cash flow is good from what their numbers said. So
that could be a nice.
And then I got the new deal I just saw from my broker.
Yeah, could be a diamond in the rough. You never know.
You guys got me energized, man. So Edward, so I mean, converted, high schools and other type of asset classes. I mean, you want to make sure you do your due diligence, do some rent stacks across the area and see, if it's a value add, right? If you can get it, similar to some other similar
it's in a relatively small market, but Ford just announced they're going to be building a big battery plant about 15 minutes away. So mostly the people that were going to live in there are real local, like they can walk to the hospital. or it's like a 3-minute drive to the local regional airport. So they're getting people like tenants, or sorry, pilots and nurses and stuff like that, that are like the ones that they're targeting. It used to be low income. They just kind of converted it over, canceling out the low income stuff because they didn't like some of the tenants that were in there. And I looked at it. Some of the rooms are really cool because they have 16-foot ceilings and kind of odd shapes, but the finish is pretty basic. It's nothing special that they put in. So I was trying to figure out how much they invested because they bought it for one, borrowed pretty much all of. I borrowed $1 million. I'm not sure what they really added for value add other than to try and change the makeup of the clientele. So, but
Yeah, I mean, yeah, just look at that submarket you talked about. It seems like there's a lot of potential. You can look at different ways to add value. Primarily, you want to, like I said, evaluate properties in that submarket to see what they're doing, like, so what amenities they have, what finishes they have, right, for the right class, right? So if it's a Class B building, I don't know what asset you're talking
right.
about. If the Class,
Yeah.
try to work
Mostly
it out.
people want it to be clean. They don't really care about the finish as much as they walk in and it looks real nice and clean. They're like, okay. That's
Right.
from my experience. I got, let's see, 17 units now. So
Okay.
Different parts of the country look at it different. So that's Battle Creek, Michigan, right?
yes, that was in Battle Creek. Yeah.
They're looking for
This other one I looked at is in this, even though it's in a worse neighborhood, but it has a bid deadline, which I'm not sure yet. I just saw the email on it today. I'm waiting for the details from the broker. So yeah, once you build that relationship with a broker, you can get ahead of anybody else on these opportunities. So, but with a bid deadline, it's a whole different can of worms, I mean, sir, there's likely a judge involved or something behind the scenes. So they're in financial trouble.
Gotcha.
So it could be a steal of an opportunity.
Yeah. Yep. Yeah, you never know. And it's the kind of property that people aren't shopping for. So you might be the only one in there. So well, cool.
I've got
Good to see you again there, Edward. And good to see you again, Michael.
I've got a question.
Yeah.
From someone in the chat. She said, can a foreigner with good credit score from Europe get bridge financing in the US? Credit score in Europe, accessible VIA, experience, TransUnion, and Equifax.
Not from every bridge lender, but there's bridge lenders that'll lend in those cases. So then once you come and you get established and have the property, we can move you into a longer term loan from there because you're established at that point. So
I think she might need to partner up. If she's got a US partner, you can solve all of that real quick just by having a partner.
yeah, that's true. That's very true.
Yeah.
Yeah.
Awesome.
So
Hope that answer your question.
Yep. So the weekly Zooms, we got Sundays at 8, Mondays at 8, Tuesdays at 8, Wednesdays at 8. And then tomorrow on Thursday, we have one at 8. And then next Thursday, we have one at 8. Sundays, we have the activation, broker talks on Mondays, learning how to build relationships with brokers. Tuesdays, the napkin underwriting. And then alternating Wednesdays, you have us talking about the debt market, and then Andrea.
Well, sorry, I forgot to change the slide.
Yeah, we don't. Victor is not on there anymore on Wednesdays. It's Andrea and Avishkar. So it's great to see everybody tonight. Thanks you all for being here.
Thank you guys for showing up, and